Good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, November 30th. As we close out the month, good to be with you guys here this morning. Michael Boutros here this morning, DJ, Iman, Mark, Peter, Pooja, Tom. Good to get through, see you guys all into the close of the week. So it's been a fun week for sure on my end. I hope it has been for you as well. We'll go over all the setups that we've been covering. Specifically, as far as event is concerned, we did get the Vienna OPEC meeting, seeing crude prices still holding above that key support that we noted last night, so we'll go over that. But on the menu for today, DXY into resistance. Bottom line, it's got to hold here if we're going to move lower. We'll talk about the euro dollar, also looking pretty good. Pound dollar, pound yen, and pound Aussie, all that we've been following this week, continuing to move to the upside. Initial resistance now being targeted on three of these pairs. We'll go over dollar CAD, Kiwi dollar. You did get some release yesterday from the RBNZ, so we'll talk about that. Aussie dollars on the menu as well. Kind of a slow burn drifter. I haven't really been involved in Aussie, but we'll take a look at some of these levels as we continue to sink lower. Dollar yen testing resistance as we speak. So again, another one we want to see hold into the U.S. trade session. Obviously, we'll go over crude and gold, and just a quick note on Ethereum did come into structural resistance. We talked about it here in the webinar yesterday. You know, that thing's been just ripping face, so it's interesting to see that we actually did see some reaction at our targeted levels. Anything that you didn't hear, or if you have any other questions or specific trade setups you want to review, as always, feel free to throw them out in the message board at any time. Your sound is a bit different today, or is it just here, Tom? I don't know. Guys, give me a heads up if there's any sound or audio issues. Can I just get a quick confirmation from you guys? It shouldn't be any different. A mild echo, says Pooja. Okay, hold on one sec, guys. Okay, hopefully that is better. Let me know, guys, if you have any problems with the audio throughout the course of the session here. Sorry about that. All right, so let's jump right in. By the way, it might sound a little different. I'm working at a different office today, but same equipment, so just a heads up. DXY, here's where we are. You know, we've been talking about this trade for some time. I don't want to bore you through all the details again from the top to the bottom, guys. Swiss dollar, still their difference in a sound, but it's okay, says Iman. Thanks, Iman. You want to look at, you're saying Swiss dollar, I think you mean dollar Swiss, right? We'll take a look at dollar Swiss. I'm not really a big fan of Swiss trading, but certainly does look pretty interesting here. So we'll, I'll be more than happy to take a look at that for you, Iman. But the DXY, so weekly chart continues to consider this near-term resistance, basic median line for the broader structure that we've been following. You saw acceleration on the way up, on the way down, again on the way down, now testing the long-term 200-week moving average as well as that median line as resistance. So weekly charts have us coming into near-term resistance as we speak. Take a look at the daily chart. Same gig. You're looking at a basic 38.2 retracement up the decline off the highs from the month. You're looking at the 100-day moving average, which is also being tested resistance. And again, that long-term median line that we just looked at on the weekly chart, all converging right here. So it looks like 93.50 again has been the level that we've talked about throughout the course of the week. Again, last dollar update was back here on the 28th. And again, I'll take you back to the 26th where we first started talking about this thing as far as the upside is concerned. Here was the open of the week. We were looking for that support at 92.59, near-term resistance 93. There's 93.50. 93.48, again, that 38.2 retracement, when you drop that to the lows that we made, was also right there. So fast forward to the 28th, and here was the advance. We were talking about wanting to see resistance here at 93.51. That's exactly what we're getting right now. So I'm looking for signs of exhaustion heading into the U.S. Open. One thing I want to note, guys, it's the end of the week. Excuse me, it's the end of the month. These times, as I always stress to you guys every month, you're going to continue to hear me do that every month, it's at the close and the opens of the month. Again, you get a lot of portfolio rebalancing, a lot of position jogging or joggering, and then obviously you get some pretty radical intraday price action heading into the close. So good time to reduce your leverage, good time to be a little bit more nimble. As it stands right now, 93.50, the emphasis is on a hold there as we head into the US trade session. Now the 120-minute chart here does show a little bit of a momentum divergence. I wanted to highlight that. You can see a series of higher highs, higher highs, higher highs, with a series of lower highs here in the oscillator. So again, suggesting near term, you are at risk for a little bit of a divergence or a little bit of an exhaustion pull lower. So the emphasis is on 93.50 as we head into the US trade session, aside from that being that 38.2, again, some former swing lows, 100-day moving average, 200-week moving average, all lining up at the highs that we just made here in the index. Okay, looking at this at a tighter time frame, we were talking yesterday in the room here. I'm not sure if it was Justin who was asking this yesterday, but as far as the momentum triggers are concerned, you don't really have anything too clear here, but certainly as we head into the US trade session, one thing I was looking at earlier is maybe something like this on the 30-minute as we get into the US trade session here to see if we can get a little bit of a trigger break to the downside, give us a little bit more conviction that we're turning over. All right, any questions on the dollar? Sort of where we're trading at, looking to see this thing fizzle out. If we do get a breach, by the way, an unfavored scenario, but let's say we do. It's the end of the month. Let's say we get a flood of influx here, 93.50 pops to the upside. 93.82 is just a soft target. Really, the emphasis goes right back on 94.14, 94.27, former swing highs, 618 retracement. I think that'd be a bigger level of resistance there if we do break to the upside. Also, former swing highs from the month. All right, Euro, that's DXY, that's number one. Number two, let's take a look at the Euro and see what that's doing. Again, the trade that we highlighted earlier this week and last night. Here's what it looked like. Obviously, when we started off the week on Sunday, we were trading right here, or excuse me, right here, we were talking about the possibility for a kickback and a deeper pull on a break below 1885 with our line in the sand, 118.06, 118.05, a basic 38.2 retracement, but this would necessitate a break below basic slope support. And certainly we've seen it, this slope has been pretty fruitful on both ends. So, we got that last spike here again last night. We turned just ahead of that parallel, and we're looking to see if we can't get a hold at these levels. Here's what Euro looks like now. Okay, again, as far as the resistance level is concerned, 118.86. Okay, it's right here on the daily chart. Here is what it looks like on the intraday chart. There's the low that we were highlighting at 1805, 1806 as our line in the sand, and where we want to see some support. So we finally got that last dump in here. Note that momentum is continuing to hold 40 as support, well above 40. Continues to leave the momentum profile in a constructive fashion. So very clear-cut, basic setup, guys. Heading into the US session, you got Euro, dollar at support. You got DXY at resistance. Look for that reaction that trade starts to pick up pace. If we clear 1885 to the upside, again, my favorite scenario, look for near-term targets at 1923. That's the weekly open. Again, you have the gap that we ran through earlier in the week before reversing 1947. But really, the high day close for the year, excuse me, comes in at 120.34. Yes, high day for the year, 120.34 right there. And it's also that former swing high that we made into the close of September trade. So levels are very clear on the upside. If we do get the break, 1885 is sort of my line in the sand of where I'd like to see this thing sort of suggest that we put in a little bit more of a concerted near-term low. A break below 1805, sayonara. You could see this thing at 117.09 real quick, real quick. So again, the emphasis on this key area of support for the Euro, emphasis on the key area of resistance for the DXY. Questions on Euro? Running through these pretty quick today. Pretty simple setups. I'm loving the price action. It's looking like we're finally starting to get some clarity on some of these near-term positions. Again, caution to the end of the month, but looking pretty good. All right, let's jump into the sterling crosses. These have been my favorite this week. A lot of sort of A&Es here, as noted earlier, as we were talking about the sterling for the last couple of weeks, months really, before this thing has finally started to show us some improvement on the upside. So again, for the longer term charts for the pound, y'all have seen this before, but just to show you the level of which we are entering, 134.94, excuse me, is going to be the high week reversal close for the year. It's right here for the 2017 calendar year. The 2016 high week reversal comes in at 136.75. So two key targets on the upside for pound dollar. Obviously, we remain constructive on the broader picture here on the weekly charts as long as we maintain within the confines of this ascending pitchfork formation, which has continued to hold like clockwork, guys. So real clean. Could get a kickback here into the U.S. Open here today, guys. But largely speaking, you want to stay constructive in the pound. Very, very simple. Here's what it looks like on the daily charts. It gives a little bit more clarity on where we are. Same formation we were looking at on the weekly charts. Not only is the 495 level the high week reversal close, but it's also the high day reversal close, as well as a basic 50% retracement from the Brexit decline. So 134. 82, 134.95, the same region that we've been watching all week long, finally hit as resistance. Again, you want to respect that into the U.S. trade session today. Could we get some kickback through that? But near term, that's certainly a level I'm watching with great interest. Let's just put it that way. As far as the pound dollar is concerned. And obviously, 136.75, 136.75, 2016 high week reversal close. That's the same as the 2016 high day close, and it's also the Brexit gap that we just missed here on this last approach in September. So sterling testing near-term resistance. So what does that mean, Mike, heading to the U.S. trade session? Any opportunities here? Well, I wouldn't want to get cute shorting this, guys. I'm going to tell you right off the bat, I'm not interested. Okay. If anything, we're looking for a pullback here to get back on the long side. Long exposure, if you have it, I would. I shaved everything off ahead of that 34.82 target. Might have been a close call. It still could probably see a topside break here today. I don't know. But at the end of the day, that's sort of the big first level that we were approaching. Again, that high day close for the year, which oftentimes will offer some resistance. So a couple of things I want to note. A, the topside break of an ascending formation typically can be your sharpest part of the rally. So I don't want to scare everyone off if you're holding long exposure. This is a near-term resistance target, but again, topside break and ascending formation could see this thing fuel up higher. Near-term support 134.17, 134.16. Again, basic 618 retracement. If we do break below that, okay, also you have the upper channel there, which is a 3-point touch. Remember, this channel or this parallel is simply an exact parallel of this basic trendline support off the weekly lows. And when we took this parallel, extended it off that high, we saw a 3-point touch, validating the slope, should offer some near-term support. Bullish invalidation, as I noted yesterday, now gets raised to the monthly open, 32.83. As long as we stay above that region, the broader picture does remain constructive. Okay, so game plan from here, if we do get a pullback, specifically a break below 34.17, I'd be looking for re-entry at one of these two targets. A topside break here, 35.43 is just a soft target. I don't want you guys to stress that too much if you're holding long exposure, but certainly this is the key region of resistance. 36.58 is the actual concerted 2017 high. And again, that Brexit gap at 36.75 follows up closely. So loving it, loving it. Remember, guys, cautiously with the crowd, boldly against. Everyone's been bearish sterling for quite some time. You can see it also reflected in client sentiment or positioning. So certainly the upside's welcome here. I want to stay constructive above 32.83, breach here. Next big topside target, 36.58, 36.75. Questions on the British pound? Looking good. Looking good. Again, wouldn't be too surprised to see some kickback here in the U.S. trade session off this resistance level, but the emphasis is on a break above this key region. So, sticking with the sterling crosses, we've been focused on a couple of those this week. Next up is pound yen. Here's another one that we've been following since earlier last week. Here's what pound yen looked like on the 28th. So again, here's the pound dollar. First target got taken out. We're testing this region right here. That's the emphasis on the break that we need to see. Again, there's the daily chart. We're hitting this target. Next one up is here. Support now brought up to, again, the monthly open, which is going to be right around 132.83. Looking at pound yen, here's the update I wanted to give you earlier in the week. We were talking about wanting to see price stabilize above last week's lows, 147.68, 147.86, key support region. We talked about this yesterday. The drop saw a perfect tag of the 100% extension. So on a correctionary basis, 2 equal legs down off the high, saw a perfect tip there. You had perfect confluence with a 3-point support trigger, so that further validates that region. And again, we didn't even get a 4-hour close below the reversal here, taking through the weekly opening range highs, taking through basic channel resistance, and certainly shifted the focus to the upside, targeting 149.46 and 150.42. Now a break here, and you'd be looking for this trend line. This is what I noted back from September, okay? And that's sort of what we're targeting on this stretch. Here's what pound yen looks like now. Okay, so we got that false break scenario along this longer term slope support, that key area of support again, 47.68, 47.86. There was a reversal. There was the break. First target's out at 50.42. Second target's out right at the 52 handle, or excuse me, 151 handle, or that basic slope extending off the September highs. So very similar scenarios we're looking at with the pound dollar, right? Heading into the U.S. trade session, you're at resistance. A bigger critical level, in my humble opinions, just higher at 151.94. Not only is that the swing objective high for the month, so it's the November monthly opening range highs, but it's also a longer dated 38.2 retracement. I guess I'll show you this on the daily chart, easier to show. That's extending off the highs that we made back in 2015. Okay, real nice tag of swing lows right here. The break certainly saw acceleration to the downside. A little bit of a pop through here earlier this year. Right now, that level converges on the 50 line, basically heading into the start of this December trade. Okay. Again, one of those trades where you do not want to get short, okay? You don't want to get cute and try to short this. Hey, Mike, we're at resistance. Momentum is still overbought condition. That means the profile is there. The push behind it is there. Certainly, if you get a break below 70, that would suggest you have a larger correction at hand, but near-term support targets have former resistance. So I'd look at 150.04. I'd stretch that out into the highs that we made just here. So possible areas of near-term support, okay, on a pullback. Bullish invalidation still has to be down here at 148.86. I know that's a ways away from where price is currently trading, guys, but we have to stay objective. The thing that put us bullish was a break above the weekly objective opening range highs, former channel support. Again, that slope there. I'm going to focus on 148.86. That's my bullish invalidate. It's the only thing that would put me bearish. As long as we stay above that, you want to buy dips. Ultimately, looking to see that break above 51.97. Okay, that's kind of the major break that you need to see to really validate it. And again, objective stuff, okay? Monthly opening range highs, 38.2 retracement, basic slope resistance, that's the level to beat. Okay, so the immediate upside rally heading into this starts to look a little bit hairy. So you want to kind of lighten your load, lighten your expectations as we get up there. Bottom line, constructive above 48.86. Pound yen, Widowmaker, as it's called. Any questions on the pound abomination? Next up is pound Aussie, another one that we've been following very closely. I gave you an update on this one last night as well, alongside crude and euro. But here's what pound Aussie looked like. Another one where this one was the one that we favored. Remember, playing the pullback, we did get some weakness in the pound. Now the pullback again came just pips. I talked about this yesterday. I didn't get a chance to get in. The 73.46 level, those former swing highs in November open, okay, converged right on that 50 line. That's sort of where you wanted entry. So, long story short, that was a really quick move. We didn't get it. The breach above the monthly highs, basic 38.2 retracement, 76, and the yearly high day close at 75.61 really validated the breakout. Okay, so you're looking for topside targets. I noted yesterday that we were at that 50 line, could see a kickback, but you're really looking for that stretch into 78.02. I'll show you what that is in just a moment. Here's pound Aussie. Okay, and those levels represent some basic swing highs. The swing high that we made in September 2016, followed by the former swing high in July of that same year. Okay, zooming right back here on the 4-hour chart, you can see that a little bit easier. So there's a basic pivot in price, basic former swing highs. You're seeing that kind of catch that drift right now. Broader picture here remains constructive well above 176. So I like that you can bring up your bullish invalidation in this one a little bit more, with a little bit more conviction than you can in the pound dollar and pound yen, which have stretched pretty hard off the lows for the week. So on this one, I think you get a better opportunity to get back on long position if you do see that setback towards 76, towards the median line. Obviously, a topside break, our next topside target, a little bit more of an area of resistance I pay attention to is going to be that 80 handle. Okay, that's simply a former swing pivot low from back here in 2016, but also objectively, it's the upper parallel for this ascending formation. All right, so I wouldn't be surprised to see a little weakness here. If you're holding longs, wouldn't get too concerned. I'd bring your stop to break even or just below the 76 handle and look to see if you can't get that stretch higher. Okay, we popped above the 50 line, so you might even see some initial support here heading to the U.S. trade session. But ultimately, we want to see that stretch into the 80 handle just higher in pound Oz. Now, obviously, Aussie weakness would be a contributing factor that would help us out in this trade. We'll look at Aussie in a moment. It's been kind of a drifter. It's been really tough to get excited about just because it's kind of stuck in this just sappy drop range. But we'll look at that in a moment. As far as pound Oz is concerned, still pretty clear. Still pretty clear. Questions on pound Oz? Again, you're clear on any event risk on those pairs, specifically pound and Oz heading to the close of the week. So keep your eye on price action there. Okay, moving right along. Still got a lot to go through, so let's keep the pace up here. Dollar CAD. I have nothing to do here, as I noted earlier in the week. There's no trade for me, but we're starting to get a little bit more clarity on direction. You know, we want to stay bearish below 28.20. That was our line in the sand. We were trading right there yesterday, guys, and I told you, like, you know, I want to see it hold, but nothing was there to support us. Momentum wasn't overbought. It was testing 70 to the upside. Dollar still looked like it had firm footing, even on the index yesterday. Remember, we did get those stronger than expected U.S. third quarter GDP revisions to the upside at 3.3%, just from 3%. So 0.3 upward revision for the annualized quarter-on-quarter print. Did see the dollar offer some support, so it was a no-brainer to not really try to short this yesterday. Here's the breach higher. We're checking the high day close and the monthly open here, which is another reason why I just don't know what to do here. There's no trade for me. You know, objectively, if this thing was going to hold the downside trajectory, this is where resistance would be. I don't have structural resistance here, so I'm not excited about it. And at the same respect, you know, you didn't do anything as far as the monthly opening range. Here's your November open. You slumped, excuse me, into the November open. You set a low pretty early in the month on the 10th. You tried to set the high, couldn't even go for a test of the monthly opening range highs. Again, tested the lows, those held. And again, here we are at the monthly open, high day close, monthly opening range high, just higher. So if anything, guys, on an objective basis, we are simply in the monthly opening range. And that monthly opening range carries over into next month. And certainly keeps the focus on a break of this near-term range. Now, if you look at this on the weekly chart, which we have been following, there's no surprise, I guess, here that there's really not much clarity, right? For the last 5-6 weeks, we've been holding just below that 50% retracement, 129.27. As far as the downside is concerned, you still have that slope support, okay, off the 2012 lows. Huge pivot in price, break, saw acceleration, break, saw acceleration. So the emphasis still for the loonie heading into December trade is still to clear the November opening range. So carries over into next month. Want to see clarity on this. Until it does, guys, there's no trade here. Don't even bother. In my humble opinion, it's not worth it to try to force a trade on this until we get some sort of directional break. Now, if we do clear 29.27 to the upside, you have clear-cut targets at the 52-week moving average. It takes into 130.20. Broader bearish invalidation for the broader trend that we've been following. Still all the way up here at 133.80 and change. So not my favorite scenario per se, but I'm neutral here. I'm neutral. The thing that would put me bearish or back on course or a resumption of the broader downtrend from last year's high would need to see a break of that long-term 200-week moving average, which again would necessitate a break below that 2012 trend line. Okay, and that's down here at basically 125.50. So look at this thing on all different time frames, continues to suggest, look, you're at near-term range resistance. I'd like to see this thing hold below 29.27. There's not much justification from a technical standpoint to take that stance yet, but a trade that will continue to track into next month. Don't necessarily have any strong opinions that would warrant any action on this now. Questions on the loonie. So I'm going to take a segue and go into crude prices here, guys. This was number 6. We'll do crude as number 7. We got the OPEC meeting today in Vienna. They did extend the production cuts to December of 2018. That is much longer than expected. Markets were largely expecting a 6-month extension. They pushed it out over a year. So certainly the implications would be to keep a floor under crude prices. And basically here's what crude's looking like to open up the U.S. trade session. We've been following this trade rather closely as well. Here was the update from last night. Remember earlier in the week, to open up the week, here's what we were looking at. Talk about crude coming right into resistance. That resistance level was defined by that 1618 extension at 59.12. It was backed up by the median line for the current operative formation we've been following. And this thing looked vulnerable. Now, we were still in an overbought condition, and the break below 70 was really the trigger to give us the pullback that we were looking for. Initial targets 57.96. Bullish invalidation was down at 56.87. Now, near term, look at this chart. Last night, or earlier in the week, we highlighted that 100% extension from that decline, highlighted 56.86 again. Okay, so we were looking for 56.86 on the first place. The 100% extension further highlighted that decline on the way down here, and again, just kind of kept us, look, if you stay above 56.86, that's the level to be. Okay, broader bullish invalidation for the entire uptrend is still down at 55. Okay, this is what you would need to see break to really shift your focus bearish. But remember, on crude, it's largely a constructive trade. I'll bring your attention back to the weekly charts. We broke above not only the yearly opening range back here in October, but also the uptrend resistance. As we always say, a breach of an uptrend resistance level typically will be a very sharp move. Now, within the confines of the advance just off last year's low, we've been working with this parallel here, and that highlights, again, near-term support around where we just tagged last night. Key resistance, unchanged, 60, 59.94 into the 60 handle. You have the 618 extension from the decline, or from the ascent off the 2016 lows. You have a basic 38.2 retracement from the decline off the 2011 highs. So the levels are exceptionally clean on this one as far as the long term is concerned. Again, this is the weekly chart, guys. It's on that report from Sunday. So you kind of have the broader levels of what you want to keep in mind. Okay, and there's sort of that key region of resistance. More critical on the upside is going to be that 2015 swing high. That converges right on the median line into the open of December trade. It's at 62.56, but the first big level is right here. So fast forward this into the daily chart. Again, you can see pretty clear cut movement. Okay, the pullback, finding support right along that 50 line. Resistance is still going to be right at the May low week reversal close. It's way back from here. So the low week reversal that we made, the close of that session came in at 57.96. We had highlighted this a ways back. It was just pips off the highs that we made for the initial monthly opening range. And again, I'll continue to use that as sort of a near-term pivot in price. Looking at this on the intraday chart, oh, by the way, also, looking at this trigger and momentum, right? We're sitting right at trigger support. We're sitting at support in price. Keep that in mind. Intraday chart looks like this. There's that 100% extension. Again, that's the level we want to see hold in our near-term bullish invalidation level. You saw that hold in overnight trade. Here's near-term resistance right back, former swing highs. That May low week reversal close, 57.96. And we're looking to stay constructive above 56.86 near term. You know, if it breaks below 56.86, I wouldn't be surprised this thing dumped right to 55. But as it stands right now, on the correctionary basis, two equal legs, sort of where I want to see this thing hold, pop back above 58 essentially, puts us back on track. 59.12, and again, there's that key region of near-term resistance right at the 60 handle, heading into the start of December trade. Any questions on crude? Now, to be quite frank with you, I was expecting that we could get a little bit more volatility from this OPEC meeting, just because there's been so much talk about these production cuts and whether they will extend them to the degree of which they will extend them. And certainly, you know, going out a year to December of 2018, you would think would have put a little bit more of a pop in this. That being said, initial focus range heading into the U.S. trade session, still 56.87 into 57.96. Questions on crude? Going once, going twice. That is number 7 on the session. Let's jump into Kiwi. Number 8. So we got some data, or we got some commentary from the RBNZ last night. I'm not going to bore you guys, but the LVR is basically what they're reducing. The LVR is their loan value ratio restrictions. Recall this was put into place as they were seeing an overheat in price in housing prices, excuse me. So the fact that they're reducing that LVR, the loan value ratio restrictions, would suggest on whole that the economy is stronger, right? And that would be something that would be encouraging. However, we've seen a lot of international buying of domestic property there in New Zealand. A lot of the concern has been that those restrictions have just made it unaffordable for domestic people in the economy or New Zealanders to be able to actually take advantage of these loans. So that being said, long story short, Kiwi coming under fire. We've been liking the short side of this trade for some time. It took a while to pan out. You know, you got this period here for a good day where you kind of hung out. Remember, 69.36 and was our level of interest for short entries, bullish or bearish rather, invalidation still up at 70. But we were looking for this to be a nice initial grab on the short side. Remember, we talked about the October low day close initial target at 68.73. We took that out last night. Next downside level, 68.28. And guys, before we get all excited, we want to always keep in mind the broader picture. And we've been talking about Kiwi coming into the range lows for the year, the 2016 open. This is still the level to beat. You can see that we snuck below there earlier in the month, but we popped back above. I still like the short side below 70. I still do think this moves lower, but I just want to put the emphasis, guys. It's really important that we clear the weekly close again below that 2016 open at 68.28. Still the level I need to see close below on a weekly basis to validate, you know, an objective break of the yearly lows. Okay. Initial targets would be 67.23. That's just a basic 618 of the advance off the 2015 lows. But keep in mind where we are. Okay, big region of support, and that's the level we need to beat. So while I do like the short side, guys, I just want to curb your appetite here heading into the close of the month, in noting that we do need to get an aggressive push below this to really validate that we're still within the confines of this broader downtrend. Obviously, the upslope broke, and that was sort of initial tell too. If you hadn't had short exposure from here, this was another opportunity to get back on. But you know, mindful 68.28 resistance or support. Now near-term resistance comes right back up here, and I want to stay short below 69.20 essentially. Let me turn that red. Okay, I want to see price hold below here. Ultimately looking for the median line. Ultimately looking for 67.41. Any questions on New Zealand dollar? Oops. here was the last Kiwi update. Just want to make sure no change to any levels. Yep, no change to any levels. So we hit that. We're trading just above that. Just bring down your near-term bearish invalidation from 70. 70 is still going to remain the bearish invalidation on the broader picture, guys, on the longer scope, the weekly charts, the daily charts. But near term on this immediate decline, I do want to see resistance at 69.20 to continue favoring the short side here in Kiwi. Question on Kiwi dollar. Going once. Okay, moving right along. So no change to any of those targets on the Kiwi. We want to take a quick glance at the Aussie. Last update there was the 27th. So here's what Aussie dollar looked like earlier in the week. You know, I want to see 75. I want to see 74, 76 for possible entries on the long side. We've been talking about that. That's the broader bullish invalidation for the huge uptrend that we've been in since last year. And that's sort of the line in the sand. Again, with daily chart continues to highlight the same region. Just a bit higher is going to be the 786 retracement just from the advance off those April, May lows, I guess. Basic slope support off 2016 lows. Basically 75, 74, 76 on the weekday charts. Okay, looking at this intraday, here's what it looked like to start the week. We were opening just below resistance. Aside from it being a 618 retracement, just former swing lows. And not only that, the initial November opening range low. So certainly that break had us looking for a late month low. Well, you got a low here on the 21st. Here's the rebound. I was kind of looking for a break below 75, 71 to get us, you know, that drop into 75, 75, 17. I have a soft target there. Maybe you start to see some support ahead of that region. But ultimately, that's the dump we're looking for. Now, we just went over the dollar index earlier in the session. We talked about that being at resistance. Obviously, that's mostly heavily weighted the euro, so that's what you're going to want to really focus on. But as it stands, you know, dollar strength may be kind of curbed. So I'm a little cautious on this. I don't have any exposure on it, just as a disclaimer, but I am looking for a settle lower to try to get back on the long. So we'll see if we get it or not. You know, I don't necessarily have a play here just because we're not really trading at support. We're not really trading near resistance. We're kind of just shooting blanks here. So game plan for me, guys, heading to the end of the week. Look, tomorrow you still do get some ISM manufacturing and ISM prices data from the United States. It's a big day tomorrow, by the way, guys. We talked about the loonie earlier. Big day tomorrow for CAD data. You have Canada GDP, you have CPI, and employment numbers. So big data block for CAD tomorrow would be sort of the main function or the main event risk I'd be looking for as far as trading. But as far as the Aussie is concerned, you really don't have anything aside from that U.S. data. So, you know, would that be the catalyst to give us the last drop into that support before rebounding higher? I don't know. All I do know is that I'm looking for a drop into this zone to look for possible long exposure or a breach above 76.70 to validate that a more concerted low is in place. So until we get one of those levels, guys, you know, if you're a momentum trader, sure, you can probably squeeze out some scalps on this, but heading into the close of the month, where we are with the monthly opening range break into the downside, I wouldn't still be surprised to see this thing dump into a new low right before we close out the month. Okay, ultimately, I'm looking to fade another drop lower. Any questions on the Aussie or where we stand or key levels from here? A little bit disappointing. I was thinking we were going to get a little bit more of a straight shot drop, right? After we held resistance there. The weekly opening range broke to the downside. Test the opening range lows of resistance. Cool. Look for that bigger drop, right? But, you know, momentum making divergence on those lows, you might not get it. You might not get it. So looking for decision time, looking for a little bit more clarity on the immediate directional bias here in Aussie. Questions on Aussie dollar? So no change to any of the levels that we highlighted earlier this week. Steady as she goes. See if we can get that last drop to offer some exposure on the long side. Dollar yen. Next up on tap, that'll be number 10. for the session looks like this. So we opened up the week just above near-term support, 1067 into 1082 is what I wanted to see hold, or what I wanted to see tag rather. We didn't quite get it. As we were writing this, we were talking about this fact that this thing turned just pips away from that support structure, and that we were noting some pretty strong divergence into the low momentum, or price rather, making a lower low, the oscillator making a slightly higher low, again below 30, so a weak signal, but a signal nonetheless, something to pay attention to. So once this thing starts to recover, 1190 was the initial resistance, our bearish invalidation, 112.48. Okay, came into that today. That's what I want to see hold as resistance, and certainly at least the initial approach looks pretty decent. Here's what dollar yen looks like now. So the abomination coming right into that level. Guys, the high for the session is literally 112.48. Okay, so you had basic slope resistance, just an upper parallel here off the highs. Nice pivot in price objectively. Former swing highs, former swing lows, converged right there. That's exactly where we petered out. Momentum right to 60. So I'm more inclined to favor a pullback from this region. Again, momentum trigger here. That's a real tight one. As I always say, I don't really like using those triggers when they're super sharp, or it's a very acute angle. So at this point, we're just looking for signs of exhaustion. I want to see this thing hold. Also, now that we've made that sort of larger reversal or larger basing off that low, it's prudent just to add a quick retracement, see if there's any Fibonacci considerations that pop up. And when you do that, you can see that the 38.2, I did this with you yesterday in the webinar, also highlights that sort of 10 pip region of resistance. So on a breach above here, I really don't have anything until 113.30. You might see a catch right here at 113, okay, former swing lows. But really, the 618 retracement converges on the level that we've been watching already as a horizontal lateral level of support and resistance. So 1325 would be, the scenario that we get invalidated if this thing breaks higher. As it stands right now, I am looking for some exhaustion here at 112.48. So no change to any of those levels from dollar yen earlier in the week either. We just simply ripped into this level right here. We want to see this thing hold if the downtrend, the break from that longer term formation is still in play. All right, and dollar index right at resistance. So hopefully the puzzle pieces fit and hold. But so far, so good. Okay, so last two things I want to cover is go over gold and ETF, ETH real quick. But certainly, I do want to take your question here, Eman, on dollar Swiss. So let me segue into that. I actually haven't checked it out the last couple of days. So let's just give me a second to review here. Okay, so here's the thing with dollar Swiss, and I think now, kind of like looking at this in the weekly chart or daily chart, sorry, I think I cut out the sound there. Looking at this on the daily chart kind of looks a little bit clearer. So the level of which that we turned from, or the level of which support I was looking for, was 98.13. Okay, that was the former swing lows from back here in March. And more importantly, you also had the 200-day moving average. Okay, and the lower median line parallel in this formation, I think everyone would agree, has been pretty decent as far as calling the pivots in price. Okay, the 50 line, the upper 50 line catching resistance. Obviously, the median line seeing pivots on both sides. Again, the lower 50 line catching support. The break saw acceleration. There was the confluence region. Now, we spent a couple of days dilly-dallying below that, which wasn't very, convincing. Here's the pop higher, catching resistance, the former monthly opening range lows, and a basic 50% retracement. A gun to my head, Eman, and again, I haven't been trading this, just to be completely honest with you, but a gun to my head, I would actually be looking for a larger setback here. So if we like euro dollar long, remember that's a long euro, short dollar, that would, I don't want to say automatically, but it would imply a dollar, dollar Swiss position lower. So you would need to bank to confirm that downtrend, okay, we would need to bank on a close below 98. So if we clear the 200-day moving average, we clear all those things that we just talked about with a break below 98, that gives you a clear-cut target to the, what is that, the 100-day moving average, right on former channel resistance turn support. That's 97.30 to the downside. Resistance, 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 3-point touch, break, saw acceleration, that converges on 200, on the 100-day, just lower. So on a downside break, that's the scenario. On a topside break, you'd basically be looking for that 50 line again. So let's look at this in a near-term fashion, shall we? Let me clean this chart up a little bit. So, Eman, does that make sense? Take a picture of that. Take a snapshot of that if you want. Some interesting stuff. Again, just working off the fly here. So some parallels always can be helpful. And the parallel off the decline there actually shows, if you extend it off the lows here, actually shows a 4-point touch here. 1, 2, 3, 4 support. So I do like this slope. Further highlights near-term resistance 98.80 where we just capped out. You know, support right here, okay? And again, downside targets are pretty clean if we do get the break. But this is going to be your sort of key break near term to get through. Okay, former swing highs, break, saw acceleration, pivot, slope support, all here. All right, so not really a trade I've been engaged in, Eman, but put a gun to my head, I would say be looking lower below 98, below today's highs. So also note that you made some divergence right into that high. The oscillator making equal highs here as the price action made a higher high on a closed basis. Closed basis. Yes, unique work. Thank you a lot. Already took a snapshot. Right on, man. Good luck with that. Again, I will track this more closely, I guess, at this point. It looks pretty interesting. I know Jamie's been watching this, and he's been favoring this pair actually over euro dollar. I don't blame him. Euro dollar's been kind of ugly lately, but I think we're starting to get a little bit more clarity in both of them. And yeah, a gun to my head, that's sort of the game plan I'd be moving forward with. Okay. Last couple of minutes here to the session, guys. Just wanted to really quickly review gold. Just saw a breakdown there, and where we are in Ethereum. Just a note on that. So Swissy was 11, gold will be 12, Ethereum will be 13. So here's what the here's what bullion looks like as we head into the U.S. Open and the close of the week. Again, as I said yesterday, the near-term picture is pretty ugly on this, but pretty clear-cut turn from range resistance, 1295. We've been talking about that level for a while, just former swing highs, really nice pivot in price. And they saw momentum unable to clear 60 for the last 3 months, essentially on the way up on any type of rebound or advance in price. So, you know, look, there's not really much structure to this decline at this point. One thing I was looking at was just basic this trend line here that gives you a little bit more space to the downside near 1273. Monthly open comes in just lower from that. But at the end of the day, guys, near term, bullish invalidation is still at 1263. Now that's the monthly opening range lows. That's a basic 38.2 retracement from the advance off of the 2016 low. And it's a 618 retracement just from the near term advance off July. All of those converge on the 200-day moving average and basic slope support off the lows. Okay, huge region. So I would like to see some sort of reaction there. I think we're going to take a little bit more of an aggressive stance on an opinion here, but until we do, you got to respect the simple monthly opening range that we're trading within. All right, so that's a quick note on gold. Objectively, you got to break the monthly or the weekly rather opening range here. So I would be expecting to register a low here either today in U.S. trade or early tomorrow. But keeping in mind that we never cleared the November opening range. It's just been a slow grind. So that's gold. Hopefully, get a little bit more play here heading into next week. Last but not least, just a quick note. I know that some of you are involved in this, not as many. At this point, but Ethereum, the only thing I wanted to highlight here, guys, and it was kind of funny because yesterday we were in the webinar. I think I just highlighted this, and I was asking, if there is such a thing as resistance in Ethereum, that's sort of the last level you'd want to see, and that's what we would have need to see a reaction at. Boy, did we get it. Boy, did we get it. Now, obviously, guys, there's headline risk. There's some outages over on the Bitcoin block, and there's some obviously headlines that are sort of running against the crypto block yesterday that fueled this decline. But what came first, the chicken or the egg? Who cares, right? At the end of the day, price came into a structural resistance confluence, and the reaction was pretty definitive. Okay, we noted that 445 was the initial support. That clearly broke on the downside. And now 385 is at risk. 385 is the former record high day close that we made prior to the break here. And the median line for the current operative structure, which obviously the median line's been resistance. The break saw acceleration. The upper parallel caught resistance. So again, further highlights this region just below 400. 385 is the actual concerted high day close. All right, so let me just clean this up. Boom. So for those of you trading Ethereum, if you're holding long position, look, if you're holding anything south of 300, you're good. I don't think you should, again, just my humble opinion, I don't think you should be bailing on that core hold. But if you're looking for near-term exposure, not the time to get long just yet. At the same time, if you're holding anything north of 385, I would be very concerned if it breaks lower from here. So I would have my stop at break even or better. So quick note there on Ethereum prices. All right, that's everything on my list, guys. All 13, we got through them all. Let me know if you have any other questions or trade setups before we end up the session. Again, I want to just caution you that we are heading into the close of the month, guys. So use some caution today. If you don't have any new intraday positions, or if you're not holding any sort of intra-week intraday positions, wouldn't hold it against you if you kind of sit on your hands today. But that being said, there are a lot of plays that look pretty sexy to me. We're going to continue to watch that euro at resistance, DXY at support, dollar yen at resistance. I want to see that. Kiwi dollar, major support. See if we break those yearly lows. And the Aussie, looking to see if we can get a dip to get back on the long side. But the setups look pretty clear. The levels look pretty clear. It's a good time to reduce your leverage as we head into the close of the month, open of December month, and the last calendar month for the year. Okay. With that, I'm going to go ahead and close up the room. Guys, want to wish everyone best of luck trading into the close of the week. Have a great weekend, and we'll be back on board. Obviously, the free session on daily FX on Monday, and right back here on SB for Tuesday, Wednesday, and Thursday. See you tomorrow for the Foundations of Technical Analysis. Yeah, see, man, I will be holding that webinar on daily FX tomorrow for those of you who want to hop on board. I don't actually have a lesson plan again for tomorrow, so we'll kind of wing it and go with whatever questions you have. So I encourage you to bring those questions, okay, man? All right, guys, best of luck trading. I'll see you next week. Have a great weekend. Cheers.